Welcome to Success Series. Today we are going to continue with our employment income taxation. But in today's video, we are going to look at bonus payment. Bonus payment. Now, an employer can make some bonus amount to the employee. In this case, this will form part of the employee's employment income. And therefore, there is a need for us to know the computation that goes into bonus payment. So we are going to look at the taxation rules for bonus payment for today. Let's dive into the rules. According to the regulation 5 of LI 2244, where an employer pays a bonus to an employee during a year of assessment, the employer shall, if the total amount of the bonus payment made by that employer to the employee during the year of assessment does not exceed 15% of the annual basic salary of that employee, withhold tax from the gross amount of the payment at the rate of 5%. Now, what does this imply? This implies that in case whereby you're having a bonus payment amount which will not exceed a percentage of 15% of your annual basic salary, you're expected to charge a tax amount of 45% on this bonus amount, the gross amount of the bonus. So by simple and short, what it's trying to say is that you have to make a check or a test. And in your test, you have to check whether your bonus amount does not exceed 15% of your annual basic salary. In the case whereby it does not exceed 15% of your annual basic salary, you charge 5% on the total amount of your bonus. You charge 5% as tax on your total amount of your bonus. And now the second option is that if the total bonus payment made by the employer to the employee during the year of assessment exceeds 15% of the annual basic salary of that employee, what do you do? So you are looking at, in a case whereby your bonus payment it exceeds the 15% of your annual basic salary, what are the taxation rules involved? Now let's look at the taxation rules involved under the second instance. Now with this one, you have to add the excess payment to the employment income of that employee for that year. So here the excess amount above the 15% will be added to your employment income. And here when we say added, we are just trying to say you are going to treat this as your cash allowance in the computation of your chargeable income or taxable pay of the employee for that particular year of assessment. So you are going to treat it as a cash allowance. The excess will also be treated as a cash allowance. Then here, once it's being treated as a cash allowance, it will also be subjected to the fair schedule, and that's the second point. You have to withhold tax from the total amount in accordance with the fair schedule of Act 896. So once the bonus payment has been included in the employment income, the total amount of the employment income, which we term as your chargeable income or your taxable pay, will be subjected to or will be taxed under the fair schedule of Act 896. And here we are just trying to talk under Act 896. The fair schedule talks about the income tax rate or the graduated income tax rate. So here the personal income tax, we are going to use the personal income tax rate, which the current one, which is ranging from 0% to 30%, to use as our taxation rules to tax the total amount of your chargeable income, which includes the excess bonus that we just mentioned. Now let's look at something key that we have to note. A person shall, in calculating tax on bonus paid to an employee, calculate the tax on the basic salary of the employee for the year of assessment to which the bonus relates. What it basically means that in the case whereby you are accounting for bonus payments, you also have to make sure that you have to expected to account for the basic salary, the tax on the basic salary for that particular year of assessment. So there's an additional information you need to also bear in mind. Now let's dive into a question which will help us to explain some of these taxation rules in the bonus. So now let's pick a question which is solely on the bonus. This question is just solely on the bonus aspect. Now the question reads: Mr. Kofi Mensah is a staff member of Success Series Limited. His annual basic salary is 9,600. He was paid a bonus amount of 1,200 during 2020 year of assessment. Required: A. Compute Mr. Kofi's tax liability on bonus for 2020 year of assessment. B. Compute Mr. Kofi's tax liability on bonus if assuming that all the information in A are the same except that his bonus for 2020 was 4,500. Now let's look at how we are going to solve. So you have to take key notes of certain things. You have to know our annual basic salary, which is 9,600. We have to know the bonus amount here, which is 1,200, and then you have to know that the B aspect is same. Now in the case whereby all our information in our question is true, but the bonus amount has changed to 4,500. So these are the key items we need to use, or we need for our computation. Now let's dive into the solution. So yeah, let's start with question A. So question A, we are just looking at the taxation rule on the bonus. And yeah, the first thing you have to bring your Ghana cedi sign. Then we state that our bonus as per our question. So bonus as per question was 1,200. And yeah, the second thing we have to do is to do our test. Remember the test? Yeah, we do a test. And the test is 15% of your basic salary. So you have to do a test on 15% of our basic salary. So 15% on 9,600 is 1,440. And yeah, when we check, we can see that there is nothing like an excess bonus. The bonus is 1,200 and the test amount is 1,440. We realize that the bonus here is what? Lesser. The bonus amount here is lesser. So the test amount is rather greater. So there's nothing like what? An excess bonus over here. So since there's nothing like an excess bonus, we will just charge a tax of 5% on the gross amount of the bonus. So yeah, the bonus is 1,200. So we just charge a tax of 5% on the 1,200. So yeah, that's it. Bonus tax will be equal to 5% on the 1,200. I'm going to get an amount of 60 Ghana cedi. Now let's look at the case of the question B as well. Remember the question B, the amount for your bonus has now changed. Now let's look at how you are going to solve that. Bring your currency sign. Now bonus as per question is 4,500. Now for the B, the bonus as per our question is 4,500. Then we conduct our test. Our test is 15% on the basic salary. So it's going to be 15% on 9,600. You are going to get an amount of 1,440. So with this, you are going to get an excess bonus because you realize that the bonus amount is more than the test value. So you are going to get an excess bonus. And our excess bonus is what? 3,160. So what is the taxation rule involved over here? So number one, yeah, you're supposed to charge a tax of 5%, but this 5% you're going to charge it on the test amount. So it's going to be on the what? The test amount. So that's the first thing you do. We charge bonus tax of 5% on the test amount. So it's going to be 5% on 1,440, and we're going to get an amount of 72 Ghana cedi. Then what was the second thing? The second thing is this excess bonus will be treated as a cash allowance in our computation of what our chargeable income or taxable pay. And once it's treated as an item of our employment income, it will be subjected to the personal income tax rate or the graduated income tax rate under the first schedule at 896. So that's the second aspect of the excess bonus, how you expected to account for it. So yeah, since our question was just on the excess bonus, we didn't dive into that aspect of the base salary. So here the explanation is below. The excess bonus will be treated as a cash allowance in the computation of the taxable pay and tax using the personal income tax rate or the graduated income tax rate. So that's basically how the computation will be done. So the amount of 3,060 will be treated as what? A cash allowance when you are calculating our taxable pay or the chargeable income, and then this whole amount, which is the chargeable income, will be subjected to the personal income tax table ranging from 0% to 30%. That's the current amount, and then that's it. Thank you.